Good morning, everyone. It's Ben Buckner and Dan Bosse with Ag Resource Company. It is Tuesday, February 3rd. We're back. New week. This morning, I think, Dan, the highlight is 45Z guidance published by the Treasury Department. And if you look at markets overnight, it's been soybean oil and to a lesser extent, soybeans that have given us steady to higher trade. We're all trying to quickly digest the brand newly released 45Z guidance. And it's interesting. I think maybe a few changes that we did not have prior to this morning. But if you want to kind of break down what you're seeing, what soybean oil is probably going to do, and how the markets at least react to this in terms of knee jerk, we'll get right into it.
Yeah, no, Ben. So the 45Z legislation has just come out from the Treasury. It's 170 pages. I've scanned it, and there's some key things that I would point out. Of course, foreign feedstocks were never to be included in 45Z, so that's not new. But as you look at it, the indirect land use was excluded. So that adds 32 cents per gallon for biodiesel and renewable diesel. So that's important, I think, and that's why the soy oil market has rallied. And it does offer some additionality in terms of profitability for utilizing soybean oil going forward. There's a lot of other nuances within the bill. I'm not going to go through, and I've only, like I said, it's only come out 5 minutes ago. I've only scanned it. 170 pages. There's a lot of details, a lot of deep dive. Hopefully we'll get some more information in wires later today, but we did want to get it out here this morning. Now, the rumor came out late yesterday that OMB had approved, or at least in the scoring of 45Z, that gave the Treasury Department and the administration the chance to release it here this morning. It is out now. We have some clarity. We'll be looking at other things related to manure and digesters and a lot of other SAF and everything else that's included in here. But at the end of the day, we think the additionality of 32 cents, because indirect land use is not included, is maybe the big item of the feature that is supportive of soybean oil. But again, not overwhelming. And as I stand back, it's still RVO, SRE allocations, which will come out by the end of March, which will be more important and more dominant, if you will, in the soybean oil and veg oil markets in terms of renewable diesel and biodiesel going forward. As you look at the chart I put up here, notice that margins for crushers have been rising. And the oil share has been rising. Of course, if we've got indirect land use providing some additional 32 cents per gallon, that helps, of course, the producers of renewable and biodiesel and other biofuels. And you can see here that, of course, this is where that oil share is pushed back up around 48%. That strong crush margin, now up to around $1.90 a bushel, is causing the soybean processor to keep bidding for soybeans. And they will be running about as hard as they can going forward. These are very attractive margins for soybean processors. And I think as you think about the future, that kind of puts us where we're at. Now, U.S. soybean crush capacity has been increasing dramatically. This goes back, of course, to the Biden bill, the Inflation Adjustment Bill of 2021. This, of course, has been something that's been important. You can see in the graph to your right, the green chart there, how we've been adding crush facilities very aggressively over the last 3 years. We still have another 3 plants to come online this year. It's not a lot of capacity, but more important to me is that when you look at daily crush capacity, we're now running around 92%. We think that number can maybe move up to 93, but these are daily maximums on crush capacity. It's not something that you can maintain over a long period of time. The industry would tell you that 89 and 90% over a year, because you are going to take downtime, is about as good as you can do. So even though the crush margins are extremely fancy, U.S. soybean crush capacity or crush estimates will not be rising very much. Maybe we can take them up another 10 to 20 million bushels, but we're nearing the top of what USDA can increase U.S. crush numbers, at least today, based on the number of plants that are in operation and those that are expected to come on this year. It's just a crush utilization question. A lot of that is the same in ethanol. As you look at the stocks of some companies, this is a chart showing you the stock of Bunge, a major U.S. crusher of soybeans in the central U.S. Notice since about the middle of November, when, of course, the Chinese started buying their 12 million tons of beans and the bean market started to come down, that the next thing in the marketplace was going to be soybean oil and this renewable fuel obligations along with 45Z. 45Z is out this morning, mostly known by the industry, but you can see here that Bunge's stock has gone from 90 to about 120, adding nearly 35% in terms of price. This is because it's expected to be strong margins for the U.S. processors for a long period of time. So U.S. crush capacity is the story. Crush utilization is where we need to think. Can we get above 90 or 91%? That's something the industry will ponder, but it's not a lot of room to the upside in terms of that. So this really means that the soybean market will come down to exports and size of South American crops, and that Brazilian and Argentinian competition for soy products going forward, in particular soybean meal. Where does meal need to go down relative to oil and the oil share? Those are things that'll be debated and traded very hotly in the months to come. And again, I don't have RVO, or we don't expect it to come until the period of March. And we also don't know anything about SRE reallocations this morning. So that's kind of a long-winded approach of where we're at in terms of the soy complex. I do believe that ultimately soybeans may move back up to something like 1075 or 1085, last week's high. That's kind of the range on the upside. But because we don't have additional crush, I do expect the larger supplies globally to push us back to this trend line, which will be somewhere around $9.80 or $10 as we enter late winter or early spring. Lower prices are possible if the U.S. farmer has more acres next in the upcoming growing season and we have favorable weather, but that's a story we can't tell today, so we'll kind of go forward at all of that. Ben, I'll turn it over to you in terms of South American weather and give us a rundown of what you're thinking there.
Yeah, I wanted to provide some context at least. And, we're still the mindset of you got to change balance sheets to change market direction in a big way, at least. And so we kind of want to take a step back. Biofuel policy is critical. We're waiting on the volume, the mandated volume to be out in the next couple of months. But for now, I think one of the other stories, and this was, I think, dominating yesterday's price action, along with some other things, but rain's coming to Argentina. And that was, I think, a big question for the market, the second half of last week. Would it come back? Were we dealing with kind of a drier than normal February in Argentina? Pretty critical month for later planted corn and, of course, soybean reproductive stages. But it's coming. And so a lot of consistency. The model's been in very, very good agreement. What you're seeing here is the 1 to 7 on the left and the 8 to 14 day preset forecast, and major crop areas are highlighted. So if you put this together, I think the drier areas of Argentina are going to see up to 2, 3, maybe 4 inches of rain in the next 2 weeks. And I can't really overstate the timeliness of this incoming pattern change. So I don't think water will be an issue for Argentina. And we're seeing the private sector and a lot of government entities too start to raise Brazilian soybean production, which is not a surprise, but it is happening. I think the best in the business are starting the process of getting towards this potentially very special monster Brazilian soybean crop. We start with EMEA, who we think is the best aggregator of Mato Grosso specific crop data and crop progress. And their bi-monthly reports yesterday, they increased Mato Grosso soybean production to 50.5 million tons. It's up 3.3 million tons from their estimate in December. And I think probably more hikes forthcoming next month than the month after. They're still using a yield a bit below last year, but what we have seen in our tour of Mato Grosso is that record yields are probable, and that crop's coming out of the field pretty fast. And so what you see here is ultimately probably get to a Mato Grosso soybean crop of 52 to 53 million tons. Ceteris paribus, that gets you to above 180 nationally for Brazil. So there's a lot of supply coming, as the market does what it does this week. And to that end, too, we got to just take a step back and look at the next crops to be harvested, on Earth. And after South American corn and soybeans, it's equatorial latitude wheat. I wanted to highlight the grain market specifically. It's just we can't identify anything that really changes this trend of very, very large supply availability. So India will start to harvest wheat March and in bulk in April. And what you're seeing here is vegetation health in the Madhya Pradesh, which is about 25% of total Indian wheat production. It's the highest on record. So we think Indian grain stocks, the biggest market in the world at this point, are very large and probably grow in calendar year 2026. And also rice stocks globally and in India specifically, the world's largest exporter, abundant. Their inventories cover about 125 days of consumption at this point in the rice market. Not surprisingly, kind of looking for a price that maybe slows future production growth and just clears inventories. And so I think this is important when we think about wheat markets, rice markets as well, and then the sort of ancillary impact on corn. So it's just very hard for us to envision prior to the Northern Hemisphere growing season some kind of spark or shock in the grain markets when we think about big picture global supply and demand. So keep that in mind in the background as the soybean oil market's adding political risk premium. I think it's just something we want to think about managing risk as we've done for the last year, really. But to me, it's still the strategy. And again, it's still pretty uncomplicated. We know what to do.
That's right, Ben. No, it's still the same. And again, we've always talked about soybean oil being the one commodity, at least at the Board of Trade, that have upside potential based on policy. And policy and weather drive prices. And today, that policy is 45Z, and the market's trying to digest all 170 pages of it. Okay, everyone, be well. We'll be back, and follow us at agresource.com for further recommendations and further advice. We'll try to do a deep dive in 45Z and give you more in terms of what it means longer term. Be well.